Okay, welcome everyone. It is 8:05 p.m. Eastern Standard Time. My name is Carlos G. I'm your host, CEO of GAR Capital, and this is the first web conferencing call type town hall meeting for everyone. Members, non-members, those who are curious, those who want to join, those who just want to hear my voice, maybe. Anyways, I digress. Welcome everybody for joining. I really appreciate you taking the time out of your day. And we're going to go ahead and get started. This will be recorded for the website for our members to go back whenever they like. This is also in conjunction with our midweek update. I also have our end of the week call or conference call video that we do on Sunday evenings, going over the markets, as you know. And without further ado, let's go ahead and get started, guys. Feel free to use the chat window, which I have open in front of me. And if you have any questions, we'll go and continue. All right, guys. So first things first. I don't know if everyone's been seeing the markets currently. Right now, I'm looking at the dollar yen. Nice little drop off from today after the FOMC minutes stating about a bullish trend or possible, maybe, could be, what be, maybe, you never know, rate hike. I mean, if those who watch CNBC, Bloomberg, Fox Business News knows for a fact that we've been waiting for a while now, since the end of December, when they actually increased the Fed funds rate about 25 basis points. And as of right now, the dollar has been hitting down. So the dollar yen has been a nice little short on our end. And we're up pretty nicely on that trade. So as you're seeing right here on a 15-minute chart, we're just going to go over a couple of trades that we have currently open. We have dollar yen here open, and right now, if I look at our entry point was 127. So let's go ahead and draw a line here on exactly our entry point, and then we're going to go ahead and expand it. Now, I just wanted to go ahead and give a quick shout out to our new VP of trading. That would be Anthony. I want to go ahead and give him a special thanks for all that he's helped out with in regards to trade watching, chart watching, and helping me a little bit with looking into trades and different setups as we go along. As you know, running your own firm isn't exactly easy. You want all the best help you can get, all the many best minds you can get. I also want to give a special thank you to our wonderful intern, Nick, who's been doing an amazing job, a great trader himself, and I'm grooming him to be one of the best traders, Forex traders out there. And hopefully one day he gets to open his own firm and not compete with me, but he has his own clientele and makes a lot of money as well. So I want to give a special thanks to all those. And my partner, Gary, who could make the call right now because he's in a business meeting, but I want to give him a special thanks as well. So with that being said, let's go ahead and continue and look at this chart. Right now we're trading at 99.72. The 99 handle has been, the 100 has been kind of the bellwether psychological mark of breaking down on dollar yen. Once we hit that, we'll start getting a short squeeze, meaning that the dollar bulls who were long position on dollar yen have already hit their stops. And when they hit those stops, those stops have to be sold or closed or sold, meaning they have to be sold off. And once they do, that drags down the currency even lower. If you look here, I'm going to go ahead and open the our webpage. If I can get that here. We're going to go to member exclusive content. I just want to go ahead and look at exactly what we spoke about as the FOMC preview on the dollar. If you look here at the bottom, when we put the article and analysis up, we spoke about a similar drop in dollar yen. Now, did the dollar yen drop immediately after the FOMC? No, it did not. But it still sent a catalyst of that, even with a bullish tone, a hawkish tone, meaning more of a Fed rate hike than being dovish, keeping rates or lowering rates. Even with that sentiment, it didn't boost enough the dollar to make it worthy of a long trade. Now, people have been positioning themselves, me included, as a euro dollar short looking for the top. Wanted to play that downside. Well, obviously, it didn't work out for us either way for the simple fact that the bulls just took over and the dollar has just been brutalized all across the board. And as we spoke about in previous articles, we spoke that the yen has been the strongest currency in 2016. I mean, we can just look at dollar yen itself at this chart here. We can go as far back as a month weekly chart. And the start of 2016, we were at 122. We are now broke down 100. So you can see how the yen has strengthened across the board, how everything from stimulus to helicopter money from the BOJ, Kuroda economics, all that, it still has brought the yen to be stronger. Now, and from a fundamental standpoint, what does that mean? It means even with the yen trying to be weak, because the Japanese do want a weaker yen because it helps their exports and it helps their helps their exports, they're failing miserably. The yen has gotten stronger immensely since the beginning of 2016. Now, I don't foresee any kind of more involvement from the BOJ in a sense to maybe prop up the dollar yen. But at the end of the day, I mean, what more can they do other than just throw out money from a helicopter, which is helicopter money? And yes, that is actually an economic term, which it's hard to believe, but that's an actual fact. Google it, guys. But we have here, as you can see on our article, that we actually had a target of 98 as of the moment of the writing. It was trading at 118. And we are trading currently, at 99.71. So our clientele that would have took that as a signal, which we would have sent it before, are now in the profit of about 50 pips. Anyway, about 40 pips across the board. So again, that's just the value added of the website. We want to go ahead and give you not only just signals, but we want to give the analysis. We want to look at charts. We want to interact with our clientele and show them why we're doing what we're doing and what we're looking at so they can become a better trader. And maybe down the line, not need a signal service. They can already be an expert in their own way of fundamental technical analysis. That's just something that we look at. That's something that we want to drive home is the client-centric nature of our firm. So that's where the dollar yen is currently. So again, we spoke about the FOMC, how it really hasn't made a difference. The same old thing, same song, different verse. Every FOMC minute is the same. Every Fed meeting is the same. Kind of some hawks, some doves. Inflation numbers are not quite there. Job numbers aren't there. GDP is not there. I mean, pick your excuse. I want you to all just write an excuse in a piece of paper, put it in a bowl, mix it up, and just pick one. I think that's what the Fed does in New York or when they go to D.C. for the testifying in front of the Senate, because that seems like what is going on. These guys do not want to change policy, especially in an election year. They want the music to continue as S&P, the Dow, the NASDAQ has hit all-time highs. Again, guys, when has this happened before? 2006, 1999, and 98. What happened right after that? I'm not calling a top. I'm just saying be very wary. Because you know what? The music stops and someone's not going to have a chair to sit. That's just basically the analogy I tell everybody when it comes to the markets. Don't time it. Just look at the facts. I mean, all we can go back is through history. And the Federal Reserve just wants to keep the music going so everyone has a chance to make money. I mean, let's be real. When are they going to increase rates? When WTI hits 100? Because that's the only thing holding back this market is WTI. West Texas Intermediate trading about 47 right now. Let's go ahead and take a look at that. Let's go ahead and take out U.S. oil. This will be West Texas Intermediate. We're trading at what? 46.82. That's where we're at right now currently. So, I mean, I want to go ahead and bring up a weekly chart here just to kind of correlate with the S&P. So as you see, as oil went down since the beginning of 2016, let's go to the daily chart, excuse me. Since the beginning of 2016, we had a little bit of a rise back to around 50. 50 has been kind of the handle. But 2015 was the brutal time. It was when everything really fell. Around the summer of 2015, we dropped from the $100 increment. So I want to go ahead and compare to the S&P 500 Trust. And you can see here, you would say, Carlos, well, obviously if oil's down, that helps the S&P. Well, the S&P hasn't been as such as volatile in comparison. We've only had a slight drop from the February lows, but we're still higher across the board, trading about 2,000, I believe 2,200 is where we're at the S&P. If I'm wrong, please go ahead and type it in the chat box, guys. But I want you to really look at the oil markets because that does influence, for example, dollar Canadian dollar and any dollar-based pairs, because oil markets are still priced in dollars, the crude contracts. So when oil does rise, the dollar tends to sink a little bit, and vice versa. When the dollar rises, oil takes a little bit of a hit. So as of right now, I mean, you could see here, if we look at an hourly chart, S&P has been pretty flat, obviously, because we haven't had really big jumps, but you could see the difference in WTI in an hourly chart, about 12%. And let's go ahead and compare again. I want to go ahead and bring up the dollar currency index. I mean, you could see the definite correlation right here. We have a little bit of a drop across the board, and the DXY, the Dixie we call it for traders, is down 1.29%, while oil is up 12.7%. So if you've been trading an hourly since about the 11th, you can see the difference. Let's go ahead and take a look at a daily. Pretty flat on the Dixie, raise in the dollar and the oil markets. I mean, you could kind of see the break right over here in the middle of this month, and you could see the breakdown, a little bit of side movement here, but for the most part, the dollar has been pretty stable in comparison. I want to go ahead and see if I can compare dollar yen. Dollar yen has been down. I want to compare dollar Canadian dollar, and you can kind of see what we're looking at here. Now, you can always use TradingView as an amazing tool to compare different instruments as you would not normally would unless you had a Bloomberg chart. This is basically a free way to have a Bloomberg chart without the headlines, but you can kind of use Twitter for that. So you have the indicators here, obviously, and then you have the compare mark. I use this all the time for when I'm trying to compare different currencies or different instruments. So as we have back here, the Dixie against the crude oil, let's go ahead and compare against dollar Canadian dollar because of the inverse correlation. And let's go ahead and take a look at an hourly. Yep, you can kind of see how the drop here is coming. And the dollar Canadian dollar is down 1.5% against a 12.69 rise. Now, granted, you're not going to get those big moves in oil versus dollar Canadian dollar because we're trying to measure ours in pips, as would U.S. oil contracts or measure those in dollars or percentages. So kind of take that as a grain of salt that we're trying to scalp our way to make money. In kind of a sense, we're trying to make hundredths of a point in comparison to percentages of crude oil or crude oil contracts or crude oil future contracts, excuse me. So if anyone has a question in regards to that, please type it in the chat window. I mean, we're going to take a look here at our Forex calendar. This is also available on our website. Just to make it easier, I'm looking here at Forex Factory. At 9:30, in about an hour from now, we have Aussie employment change and unemployment rate. We also have tomorrow morning, guys, 7:30 in the morning, we have the ECB monetary policy meeting accounts. The ECB has kind of put down any kind of talk of a Brexit affecting ECB economies or any kind of currency issues in regards to the euro. And let's take a look at a euro chart in comparison and see how that's been doing. Let's go ahead if I can get that going. There we go. Let's look at a euro USD chart versus, there we go. This is our dollar, our Dixie. And you can see that just the change, just in an hourly, you could see here, and we're going to look at a 4-hour chart. I mean, you're starting to see the break here, the curve break, as you can see at 1.80 versus a down 1.150. I mean, has a dollar been the weakest across the board lately? I would say the dollar has been. That's an accurate statement. The euro has not been the strongest, but has been mid-level to strong. For example, how would I rate that? What you would want to do to get started, and just in that question, you would want to rate your currencies strongest to shortest. I mean, strongest to weakest. So if we would go to currency strength, we can actually pull up that calculator here on currency strength indicator. We can actually bring this up here. Bear with me a second, guys. I guess my Wi-Fi in this apartment's pretty slow. Bear with me, guys. Here we go. And we'll pull off the commodities here. So the majors, you could see how everything compares. Pound yen has been pretty weak. Anything against the dollar. Yen has been stronger against the dollar. Pound has been taking a little bit of a hit. The Kiwi's up, the Euro's up, Aussie's up, Canadian dollar's up. And the dollar here at the basic. I would say the dollar is only strong against, who's the weakest here? The weakest currency, I think it's a little difficult to see. I would say the weakest currency would be the pound against the dollar. Pound and dollar would be kind of the weakest link. Let's go ahead and compare that. Yeah, even the pound dollar has been pretty weak across the board on a 4-hour. We'll look at an hour chart now. And you can kind of see that the pound is a little bit, pound has been a little stronger. Dollar, Canadian dollar, a little weaker. So the Canadian dollar has been stronger, the pound has been stronger than the dollar, and the euro has been stronger. So if you want to compare weakness against strength, euro has been stronger, then you would have the pound, and then you would have the Canadian dollar. The Canadian dollar would be better off against the pound on this hourly chart because you could see the difference here. It's about pretty flat. So this is just another tool. So let's go ahead and compare here with the dollar yen, which we were speaking about the strength. And the dollar yen across the board, I guess the Canadian dollar has been a little stronger than the yen just in the hourly chart last week or so. So looking at that, at those trades, you want to go ahead and pit strength versus weakness. So how would we do that? Looking at what we're looking at right now on the dollar, we know it's weak right now, even with the Fed minutes being hawkish. What would you trade? Looking at this data, I want you to go ahead and, if you don't mind, type in what trades would you trade right now? What would you be looking at? If you wanted to make a trade right now, long term, what would you trade? Okay, so I have dollar yen. Okay, obviously dollar yen at the moment is trading at 99.67. NZD UCD. Okay, so let's go ahead and compare the Kiwi dollar. Let's do that. Let me go ahead and scroll this up. Okay, definitely. You could see that the Kiwi dollar is up about 1.5% on this hourly. Now, what about euro dollar? Would you guys trade euro dollar to the long side? Would you go against the trend of euro dollar? Probably not, right? You want to be the trend to be your friend. Any other suggestions? Anyone else that we want to look at? In comparison, we want to compare dollar charts. We want to compare weakness against strength. What else you got, guys? Okay, we're going to go ahead and take a look at Aussie dollar. Okay, let's take a look at that. Let's compare that as well. Okay, now our green mark is Aussie US dollar. So looking at what we're looking at our screen, we've already kind of ranked ourselves on what to trade. So if you guys are just primarily dollar traders, primarily euro traders, primarily yen traders, what you can do on this chart, which is very powerful on TradingView, and it's, again, absolutely free. I highly recommend you guys sign up for an account. It's real time, and take a look and compare. You want to compare strength versus weakness. We're looking here. We have our euro dollar. We have here in orange pound dollar, which is relatively flat. Kiwi dollar, relatively flat due to the cutting of the interest rates. I mean, we were up 1% and near 1.25%, I believe 2 days ago. I mean, we're looking here at Aussie dollar, pretty flat, pretty low actually. And we're looking at dollar, Canadian dollar. Canadian dollar is actually 1% up. The strongest, still, guys. Guess who it is right here at the bottom? It's Japanese yen, dollar yen. Down 2% on a weekly basis. That's the way to go. So looking at what we're looking at, we're going to go ahead and rank them. We're going to go ahead and put dollar yen short as our number one trade. we'll go ahead and put the next trade as euro dollar long. And then the next trade I would do is dollar Canadian dollar short, as you can see right here. I mean, all good trades. Definitely want to put it at 100, 120 point pip stop. You want to go ahead and make sure you have a 2-to-1 risk ratio, 1 to 2% position size. That's what I would do. That's what I would do personally. I mean, you can see the strength against the weakness across the board. I'm going to go ahead and take a picture of this chart as a 30-minute chart for the Instagram and the Twitter in comparison to be as a little bit of a reference point. Of course, you guys can always email me, garcapital@gmail.com, so we can take a look at future charts together and see how we can do this together one more time. So a currency strength calculator you really don't need. You can kind of just plug and play yourself and see how it goes in real time. Now, again, guys, this isn't gospel. This is just a way for you to get you in the right direction. You want to make that spread. It's strong against weak. But again, any kind of big indicator in regards to a leading indicator, as housing starts in regards to the economic cycle, or GDP, initial GDP print, NFP, always be careful, of course, guys. Just don't jump into those trades not knowing what you're doing or having a long-term plan, because that's what exactly you want to make sure, especially with those kind of big volatile movement events. You want to make sure that you have your trading plan, you get in, and if it doesn't work out for you, cut your losses. And if it does go your way, I mean, guys, I'm totally fine for adding positions. Add positions when it goes your way. Move your stop losses to break even. Play with house money. Play with profits. Keep your portfolio safe, please. I'm all about risk management, guys. I know it's like a broken record, but it's something I repeat on a daily basis. So we're going to go ahead and leave it at that. If anything else you guys may need, I'm going to put in a couple of more articles for the week. Nothing much going on until tomorrow. We have the ECB minutes print. It's going to come out in the morning. I'll definitely be available for any kind of emails. I'll be on the website updating articles. The next video will be on Sunday. Oh, here we go. Coffee shop trader. Okay, 100 pips, is that way too much? When it comes to swing trading, no. And I'll tell you why. It's because of volatility. Volatility is the death of trades. Give an example. So let's do the position size calculator. I'm going to go ahead for purposes of example purposes, a $5,000 account balance. We're going to put a position risk of 1%, 100%, $100 stop loss or 100 pip stop loss. And we're going to go and do the euro dollar trade on the long side. Where does that leave us? $50 cash risk, 5,000 unit trade. That's where we're going to be at. 5 micro lots or half a mini lot or 5/10 of a standard lot. And that's where you'd be at. Again, guys, the 100 pip stop loss just keeps you from being knocked out really quick, especially for any kind of volatility, any kind of big movements. I mean, look at the Japanese yen. Let's say if you were long euro dollar yen today. Let's go ahead and take a look at that, at the 15-minute chart on that. Just let's say if you were long dollar yen, just for the heck of it. Let's take a look. Let's end this. Let's go ahead and compare these indicators. We're going to go ahead and take a look at dollar yen. Let's say if you were long. For whatever reason you were long and you were playing the bounce back. And you entered at 100. Okay, and you put a 10, 20 pip stop loss. You're already out. Right? You're already out. Let's say if you were right here, right over, let's see if we can get let's say if you were short the dollar yen at 150. And you were playing short knowing that, it's going to drop longer term. I'm going to wait a couple of days to get it go. But I'm going to put a stop loss of 100. Well, you would have been knocked out right over here. About a couple hours after the trade? 3 hours after the trade? And you already lost your commission. So to bounce back and time it, you've already lost all that action. This came back up to 100 right after that drop. Literally 4 hours after that drop. Now, it kind of ranged in the middle around 130, and then we spiked up to 101. Now, would you have been knocked out? Sure, a little close to a knocked out, but then you could have ridden all this back down. So even if you added 100 or 150, and you were at 101, that's only 50 pips. But if you would have rolled this all the way down, you'd still be up. If that makes any sense. Again, you want to go as long as your period of trading is. Again, as long as you have the proper position size. That's the number one key. 1 to 2%, 100 pips, 50 pips. I'm okay with 50, but more likely you're going to get knocked out. I like 100 pip stop loss. That's just my personal trading style. Unless you're trying to do a scalp, unless you're just trying to play news, fine. But for the most part, I like 100 if it's a longer range trade. Great question, though. Anyone else have another question? We're going to go ahead and wrap this up here. So as you can see here, we do have all these tools for our traders and our members. We have the charts, we have the pip calculator, we have the position size calculator, everything. All right, no problem. Appreciate you being on. I definitely like doing these videos. I definitely like hearing feedback from clients and would-be clients. It's a lot easier than a Periscope. Periscope, I'm on the phone, I'm all over the place. You know, you get distracted, XYZ. Pick your reason not to do a Periscope. That's basically why I don't want to do it. I like to go to meetings where I can actually share the screen and I can show everyone exactly what we do and why we're doing it. Definitely something that I enjoy personally. And guys, I'm very accessible. We have our chat rooms for our clientele. You can message me anytime, unless it's in the middle of the night, which is going to take a little bit of time for me to get back to you, like an Asian session. Emails, I answer my emails personally, not my assistant. I answer them. So, you know, definitely give me a message, email, anything you need. If you want to DM me on Instagram as well, definitely follow us on Twitter at JR Capital, our Instagram at JR Capital. Our Facebook page, JR Capital FX, we're working to, JR Capital, We're working to bring that up a little more, to put more content, but we share everything on there. Well, you know what? That's going to be a wrap here. We've been about half an hour doing it. Appreciate everyone joining us today. This has been an excellent call. I hope to do this more often. If you did enjoy it, please, please, please email me so I could know you like these videos so we could do more often and have everyone involved. It's fun stuff, guys. This is a passion for me. I love the markets. I love sharing information. I love having fun. To me, it's fun. I love doing this with everybody. And I really appreciate you being the time with me this evening. I know everyone has a busy life and they're doing what they got to do. And, you know, you being with me really means a lot. And I hope to bring more great content, great profits. And I'll take a couple of pictures for the Instagram as well. So we'll go and leave it at that. And thank you so much for joining again. This will be recorded, put it on the website, and available for everyone to watch at a future time. So we'll go ahead and talk soon. I will check you out tomorrow for the London session. Everyone have a great night. This is Carlos signing off.